This is CGTN, China Global Television Network.
Hello and welcome to Dialogue. China's GDP expanded by 4.5% year-on-year in the first quarter of 2023. What are the key drivers behind the better-than-expected number? What are the challenges for further growth for the rest of the year? Meanwhile, more and more countries have been quietly looking for currency alternatives to the US dollar in global trade. Could this mark the start of the global de-dollarization? To discuss these issues and more, I'm glad to be joined by Anthony Chan, former JP Morgan Chase chief economist, Chen Jiahe, chief investment officer of Novem Arcade Technologies, and Hong Hao, chief economist of Grow Investment Group. That's our topic. I'm Xu Qinduo. Welcome to the discussion. Anthony, I will start with you. Well, the first quarter, the first 3 months, economic growth, the number, like 4.5%, people say it's better than expected. What's your takeaway?
I think it's a very impressive number. It's certainly caused me to raise my estimates for yearly GDP in China to about 6%, which is obviously much stronger than the expectations in China, and certainly the growth target that you're hearing. So the number was very, very strong. There's a lot of exciting information underneath the hood. Some components coming in stronger and some components coming in much weaker. The unemployment rate going down was impressive. The disappointment, of course, is the young people between the ages of 16 and 24, seeing that number going up almost to 20%. So obviously, some structural unemployment issues that need to be dealt with, but overall, the growth was impressive.
Jiahe, if you look at the numbers, help us break down the numbers. What are the key drivers in terms of the economic expansion?
Well, when we look at the economic expansion, I would say almost all the factors are playing pretty good. The first would be if you look at the international trade. I mean, the trade data wasn't really good in January. It started to pick up slightly in February. And in March, we got a very good data. We have saw companies reporting, also because we have been investing quite a lot of port companies. We have saw companies reporting very good data in the first quarter. Keep on telling you that we have more shipping coming in and out of the port. You look at the consumption, the tourism sector, the book selling, all these kind of things are starting to pick up. Also, the investment is not bad anyway, and looks like the property market is starting to coming back slightly.
The trade seems better than expected too, but it's a shifting, seems the pattern, reduce the trade with US and Japan, for example, and increase the export to ASEAN countries.
Yeah, that's probably one of the sectors I know the best, because I missed a bit audio just now. Because we have been investing about 20 to 25% in port companies. We do look very closely on the trade. And when you look at what the trade has been going on, it's actually performing much better than what the capital market has been expecting. Because if you look at what people has been expecting last year, it was that it thought, okay, the GDP in United States, in Europe are not very good. In the US is having inflation, Europe is having the war. So because China are a large trading partner with US and Europe, so probably China won't have good trade. So people were expecting that, and a lot of port companies got low valuation last year. I mean, at the end of last year, because of this, people expecting the trade was not very good. But this year, we have saw the trade picking up much faster than before, especially in March. So we have saw these companies' stock prices starting to pick up anyway. That's about the capital market. But if you look at the composition of China's trade, it's actually having the Asian countries as the largest one. It's actually much larger than our trade with Europe. And when you look at the trade between China and United States, that's actually currently ranking the third compared with well, compared with the first two ones, Asian countries and Europe and Japan. I think Japan is ranking the fourth. So if you look at this, it's actually much more healthier than before, because China is not having a very good trading relationship with US. Everyone knows that. But China is having a better and better trading relationship with Asian countries. And if you look at the per capita GDP of Asian countries, they're actually much lower compared with mature economies. That means they have much larger potential. So China is having this large trading with Asian countries. That's good for China, and that's good for Asian countries as well. So we see actually the market is actually giving much more confidence now to the trading, to the port, to the shipping companies.
Well, Anthony, if you look at the trade numbers, which is up 4.8% in total, but you do see that reduced trade between China and the United States. Of course, China's exported to Japan. How much does that have to do with the decoupling efforts, or probably have something to do with the economy? As inflation remains very high.
Well, in the first quarter, I think that the U.S. economy remained resilient. We'll see that in the first quarter GDP numbers when we get that. Some of that weaker trade, of course, is due to the decoupling. But the real interesting story, and I agree that the numbers were impressive in the first quarter, but the real interesting story is what happens the rest of the year. And I think what happens during the rest of the year as the U.S. economy gets weaker, that trade with the United States will actually deteriorate, not improve. I agree with
well,
it's encouraging that China is having a much better trading relationship with other countries in Asia. That's impressive.
Well, Anthony, how do you look at this, the strong growth, in particular in March, in retail sales, the consumption sector, which is critical to the recovery of the economy in China?
Yes, the retail sales numbers were very strong in March. They were also strong in the first quarter itself. So that is good because as the economy opened up after the COVID shutdown, it really tells me that things are, in fact, starting to pick up. And given the fact that there is some uncertainty with external demand, and when I say that, I mean external demand vis-a-vis the United States and vis-a-vis Europe, if those economies slow down or whether there's some decoupling, to start to see that demand for retail sales is growing. Catering sales were very impressive in the GDP numbers. All those things tell me that domestic consumption is starting to rebound, and that is very healthy development for the Chinese economy.
Well, Hong Hao, we are seeing the consumption is coming back, but how sustainable or how strong it will be for the rest of the year?
Yeah, sales growth is substantially higher than expectation. We're registering 10+% growth. But, just remember that, last year when the Chinese economy reopened after the lockdown, sales was up substantially as well, right? So, this is a lower base effect. So, given that it's a lower base effect, there is a component of one-off seasonality factor in there. So I think going forward, going into the Labor Day holiday, what I'm hearing is that, the booking, hotel booking and also the flight booking has been very, very strong, right? So, more likely than not, we're going to see a very strong Golden Week holiday, for the past 3 years. So I would say that, consumption is actually looking good at this stage. And also in March, we're seeing the household sector starting to borrow again, right? So the loan to the household sector is starting to expand. So all those are very good signs. And, there are signs suggesting that, growth in retail sales can be quite strong going to the second quarter of this year.
Well, related to that, Hong Hao, China's inflation number, came in at a low 0.7% for March. There's a discussion about whether there's a deflation in China. Should we be worried about that?
Yeah, I don't think we should be worrying about deflation. I think, first of all, inflation is a lagging indicator, right? So it's telling us what the economy was doing 3-6 months ago, when the Chinese economy was going into a very difficult period in the last quarter of last year. And I think, right now, we're seeing very strong monetary expansion, right? Entry is growing at 12-13%, and it's actually one of the highest in recent years. And that tends to lead inflation higher in the coming months. So I wouldn't worry too much about 0.7% inflation, just because one number doesn't make the trend.
Well, Jiahe, another important sector is the property sector. Fixed asset investment. Some people say the total sales is not that impressive, but in terms of value, it's not bad. And there are expectation that this kind of recovery will continue, will persist into the next quarter, given the economic supportive measures from the government. What do you make of that?
Well, regarding the property sector, I would personally not prefer a property sector that keeps on going upward and be very strong and encourage a lot of investment into it. The biggest problem, if you look at the property sector, is that it can't take the major role of the economy because the property price is actually too high. I mean, especially when we look at first tier cities. I mean, if you go to second tier cities, third tier cities, the property price there is much lower. I mean, you're really at about 10,000 RMB per square meter. So that's quite fair. I mean, people can easily afford that. But if you go to the first tier city, you have very high price. So as long as the property sector can keep stable, I mean, not going too hot, not going down too cold, then let the consumption do the job. Let the export do the job, especially the consumption, because export is something that China cannot control on its own. I mean, that also depends on how is it going on in the United States, how is it going on in Europe. But consumption is something that we can definitely control by ourselves. I mean, especially the domestic consumption. So that's why we see the government is actually putting a lot of effort onto consumption. The property sector, regarding that, it's better to remain stable. I mean, we don't want a property sector that's going upward too much. That would mean too high a bubble for the economy.
Well, Anthony, if you look into the next 3 quarters or next few years, if you may, given the relationship, we see tensions between China and the U.S., we see the decoupling efforts, and of course, so like to what extent that will present a challenge to China's economic growth.
Well, I'm actually hopeful that the challenges that we have today are not going to be the challenges that we face a year from now or 2 years from now, as we now realize that it's much better for the two largest economies in the world to cooperate rather than work against each other, because that's how you make progress. That's how you raise the standard of living in China and the United States. So I am actually cautiously optimistic that at some point cooler heads will prevail and these two economies will get along, because after all, China is responsible for more than a third of global GDP growth. And so to be at odds with an economy that is responsible for over a third of global economic growth makes no sense at all. So yes, we do have some challenges over the near term, but I'm hoping that over time, those challenges stabilize, or those challenges start to melt away.
Well, Honghao, I want your opinion about the challenges, for the Chinese economy. Earlier, Anthony mentioned about, could be a possible structural problem in terms of employment, especially for the young people aged 16 to 24. How challenging is that?
Yeah, well, this year we're seeing almost 12 million new graduates coming into the job market. And I think ever since a couple of years ago, it's 10 million plus each year for the uni graduate to go into the job market. So we are not new to this kind of situation, right? So the young unemployment rate has been consistently high for some time now, especially during the pandemic. I think right now we're trying to come up with a innovative solution to this problem. For example, we're taking the kids to the rural area to help with works that needs to be done to build up the Chinese rural area. We're gonna send them back to the postgrad school to receive further education. And there are other ways that young people are making money. For example, being a key opinion leader on the internet, making videos on the internet, posting on the internet, can make quite a bit of money as well. So I think nowadays there are new jobs that is available for the younger kids, and it is not like back then you have to find a job and sit in the office. Right? So I think now there are a lot more ways to create money, to create jobs for younger people.
Well, a lot of changes inside China as well as outside, China globally. Jiahe, we are seeing some people would call, the de-globalization process in terms of trade, global trade. We're seeing, for example, Brazil and China, they agreed to a deal basically to settle their trade in their own currencies, bypassing the dollar. Russia, for obvious reasons, they are doing that. We are seeing India is doing that, Kenya, the ASEAN countries, Saudi Arabia. What's going on here?
Well, that's probably when we see the United States is losing its dominance with its currency and its trade. I mean, if you look at what has been going on, China is actually the world's second largest economy. It's growing really rapidly. Actually, if you measure from the purchasing power parity, China is already the world's largest economy. And there has been, a very bad relationship between China and the US. I mean, everyone knows that the trade is going on wrong with China and US. So that's actually it's actually bringing the US dollar out of the circulation somehow, because China is such a large economy. I mean, if China is an economy that has maybe 14 million people, not 1.4 billion people, then this distraction of the trading relation between China and US is not a big deal for the United States, because you're a small country. But when you look at China right now, it's so large, having so many things to export and import. Then that means this destruction of relationship actually kicks dollar out of the circulation somehow, because China is growing so large. But if you look at the future, the globalization, the trade between countries is actually something really helpful. I mean, any country engaging into that, for example, China, United States, Brazil, Russia, South Korea, Japan. I mean, everyone who engages into trade are really good with developing. Anyone who moves themselves out of the global trade is actually being hurted from it. So that's actually the trend. I mean, everyone really have to trade. It's really the best way for development.
Well, that just seems like a different take over there, global trade. But, we are talking about globalization, but at the same time, we are seeing, again, what some people would call a de-globalization process. Anthony, does that have something to do with, the bypassing of US dollars?
Well, of course it does. There's no doubt. But one thing to keep in mind is that to have the US dollar to lose its reserve currency status is a very long process. I think that we may be heading in that direction, but that is not something that's going to happen in the next year or the next 6 months. It takes a long time for a country, certainly, to adopt a reserve currency status. They need to be able to supply a lot of that currency to others so they can transact with it. The U.S., of course, for many years has been running a deficit country, a negative trade deficit, and China, of course, has a surplus. And in fact, in the latest quarter or the latest months, that surplus is getting much, much wider. So you need that surplus to disappear. And it's not entirely clear that China, with a growing, healthy economy, wants to move towards a deficit status. You also need the currency to be freely floating. The head of the PBOC says that is the goal, and they're moving in that direction, but not there yet. So transition is going to take some time to get there. In the near term, what you're going to see is exactly what you're seeing now, and that is that other countries will transact with China. You've seen that they're going to be using perhaps the yuan. You're seeing that with Saudi Arabia when it comes to oil. So you'll see more of that, but that does not mean that a particular currency is going to become the reserve currency of the world overnight. That's going to take some time, but the process has started. I agree with all the other guests that the process has started.
Mm-hmm. We'll come back to the use of yuan later on. But Hong Hao, Janet Yellen talked about the possibility of the risk, basically, to the hegemony of dollar because of the weaponization of dollar or of the financial system, for example, against Russia, the foreign reserve of Russia being frozen, that people say that scared a lot of countries, to take care of or good look at their own foreign reserve, where to park or in which currency to park. Is that one of the major reasons, or are there any other reasons?
I would say that people are having a second thought, about how best to use the U.S. dollar reserve, right? Because back then the U.S. dollar reserve is regarded as one of the best and safest reserve system. But right now, because of some geopolitics argument, you can have your foreign reserve frozen by the U.S. authority, right? And also, I think in the recent months, you can see many of the countries, including the Middle Eastern countries and some European countries, they have actually been reducing U.S. Treasury holding and buying gold, increased gold holding in the central bank reserve. So, there are many telltale signs, just suggesting that people are trying to move away from the dominance and trying to come up with an alternative currency system, for the world. We're not saying that, this alternative system can replace the dollar system in one go, but I think, it is growing, and I think the RMB is one of the best candidates for this alternative currency reserve.
Mm-hmm. Well, Anthony talked about the yuan, the use of yuan. Obviously, we are not necessarily looking at the yuan replacing dollar phenomenon. It's more like, the more frequent use of countries' own currency instead of the dollar. For example, for Russia, the ruble. For Brazil, probably their own currency. India. What kind of a scenario we are entering into? Like a new thing. Like multi-currency alternative to the use of dollar. Anthony? Yeah.
Oh, for me, okay. Yeah. Yes, I think that is something that is happening. I think it's actually very healthy, because I don't think to have the dollar as the reserve currency of the world has always benefited the U.S. So to see other countries participate, India is another economy that's contributing tremendously to global economic growth. They certainly should have their currency involved, as well as China. So I think it's actually very healthy to have that. Obviously, there's some disadvantages to the United States, where they've enjoyed much lower interest rates, the ability to borrow at lower rates. But for the global economy, and that's the goal, that's what the goal should be, to have other currencies participate, I think it's a positive development.
Well, how big an impact that will be, Anthony? Are the people in the U.S., in the Fed, or in the Treasury Department worried about the possible, or if the trend continues?
Well, I think that when you have a national deficit that's over $30 trillion, and there is any risk that your ability to borrow at lower rates is threatened, there is going to be some concern. But I think that if we are good global citizens, we have to think about the global economy and not just one country. So I think it is a positive development. But sure, there is going to be some concern out there on the part of the Treasury, on the part of the Federal Reserve, if the dollar starts to lose its reserve currency status. But as I indicated a little while ago, that is something that's going to take quite some time. And there is always the possibility that policies can change, that somehow the United States can reassure countries out there that you're not going to go ahead and freeze dollar assets just at random or capriciously to introduce some more comfort. Already there is some nervousness, but again, which are the countries that are expressing nervousness? Countries that think that somehow they may be on the bad side of the United States, so that the United States could get mad at them. But to the extent that the United States pursues a policy of inclusion and pursues a policy of trying to promote the good of all countries, then some of that can be reversed. But it's not going to be an easy road to cross.
Well, Jiahe, for countries choosing to use their own currencies more and more and reducing the dependence on US dollars, what benefits are there for them?
Well, it's actually if for any country, the best thing that they actually want is to use its own currency in the global trade. I mean, everyone wants to use its own currency. I mean, China wants to use RMB, Japan wants to use yen, United States wants to use dollar. I mean, everyone wants to use its own currency. The only problem is that we can't. So especially when there was a U.S. Dominated currency system, that means because our economy was not strong enough, so everyone said, okay, United States economy is the strongest in the world, so let's use the dollar. So that's what has been going on in the past 2 or 3 or 4 decades. It's been a very long time after the golden standard. But now is that because there are multiple nations and economic zones that are actually becoming more and more stronger and stronger compared with the United States. Look at China, look at the Eurozone. I mean, these are the 2 largest challengers of the US dollar. So in the future, you will probably have a much more multiple currency system compared with before. You will have euro, you will have yuan, you probably have a part of yen as well, these kind of currencies. You will have this to be going on. And for these countries and economic zones whose currency is widely used in the global market, it's actually pretty good for their own economies.
Good for their own economies. Hong Hao, so
Definitely.
That's the future we are going to have. Probably, a global trade will be dominated by a few currencies rather than one.
Possible. I think at least we should have an alternative system to stand by, right? Just in case something really goes wrong. I think the other guests are very right on this topic, and I think going forward, it also takes a structural change, right? As China trying to restructure its economy towards a consumption-based economy, right? So it's starting to consume and starting to export all this monetary supply that we have in this system, right? So now we have like 280 trillion worth of RMB that is sitting in the Chinese system, waiting to be exported, right? So to be converted into a Chinese consumption of foreign goods. So I think over time, I think as the Chinese consumption pattern change, savings pattern change, then the system will change naturally. But I think right now, most of the countries that is holding the U.S. Treasury are the saving countries. These are the countries have extraordinarily high saving rates. For example, Japan, Middle East, and China. All right, so if the structure can change, then apparently the international currency system will change as well.
Well, if we look at the changes, Hong Hao, like what a time frame we are looking at? Probably in in how many years we are going to see probably more obvious change in terms of the domination of US dollar?
Yeah, well, obviously the pace is accelerating. For example, right now, the RMB takes about 7 to 8% of the global trade settlement, right? So, out of nowhere, right? So, in just a couple of years, we're reaching 7-8%, right? So that's a phenomenal achievement, and I think the process is accelerating because of what happened since last year. So no one can be sure like how fast we can develop such a system, but I think history has told us that it will take more than 10 years, and sometimes even longer, for a competent alternative payment system to be developed.
Well, on that note, we conclude today's discussion. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.